Before we jump into the Coherent Investor Day deep dive from Big Picture Investing, I want to let all of you know that I will be doing a deeper analysis on Coherent, Marvell, and my other basket of AI stocks not named NVIDIA over the next 30 days. So if these stocks interest you, make sure to stay tuned for my future deep dives and deep analysis into the future growth of these companies. With that said, let's jump into today's deep dive.
Welcome to the deep dive.
Good to be here.
Today, we're really digging into Coherent. They had their investor day recently, presentations, Q&A.
Right, a lot of material came out of that.
Exactly. So we've gone through the slides, the discussions, trying to get a clear picture of, well, their financial vision and where they see the big opportunities coming from.
Yeah, what's the game plan, essentially?
Our mission today is really to unpack all that for you, get to the core of Coherent's outlook.
Okay, let's jump in.
So they laid out some pretty specific financial targets, didn't they? Using fiscal 25 as the base year. What were the headlines there?
They did. Number one, revenue growth. They're targeting double digits going forward, specifically that 10 to 15% plus range annually.
Okay, 10-15% plus top line. That's pretty solid. What about profitability? Margins?
Yeah, big focus there too. Gross margin target is greater than 42%.
42% plus. Okay.
And then operating expenses, they want to get that down to around 18% of revenue. You put this together, and the goal is an operating margin above 24%.
24% plus op margin. Those are, well, ambitious targets. How do they actually plan to get there? What's the strategy behind those numbers?
It's really a multi-pronged approach. I mean, on the margin side, improving gross margin is huge.
Yeah.
They talked about pricing optimization, especially in their industrial segment. It seems like they see room there. And then pretty significant cost reductions.
Across the board.
Across the board, yeah. Direct materials, overhead costs, and just getting better yields, more efficiency in manufacturing.
So smarter pricing, getting leaner on costs. Makes sense.
Exactly. And they're also applying that efficiency lens to R&D, really scrutinizing investments, focusing them on core growth areas with, strong long-term ROI, not just chasing everything.
Disciplined R&D.
Right. And the same applies to SG&A, sales, general admin costs, finding efficiencies there too.
Okay. And this all ties into their capital allocation strategy, right?
Right.
They talked a lot about the balance sheet.
Absolutely. Disciplined capital allocation is key. And strengthening the balance sheet, specifically reducing debt, is a major priority. Very high up there, right behind investing organically back into the business itself.
And are they making progress on that debt reduction?
They are, yeah. The target is to get their debt leverage ratio below 2 times.
Okay.
And they give a pretty striking statistic. Year to date in this fiscal year, FY25, they've already paid down 7% more debt than they did in the entirety of FY24.
Wow. Okay. So they're not messing around. Deleveraging is moving fast.
Seems like it's a really high velocity priority for them right now.
All right. So the financial framework is clear. Grow the top line 10-15% plus data center in town, expand margins significantly, operate more efficiently, and pay down debt aggressively. Now, let's talk about what drives that growth. Data center and communications, that feels like the engine room, especially with AI.
It's definitely presented as a primary growth engine. They see that whole segment growing in the 15 to 20% plus range.
15 to 20% plus.
Yeah, and potentially even faster, depending on how the AI data center build-out continues and some of these newer market opportunities they're chasing.
And those opportunities are all about connectivity, right?
Yeah.
Faster speeds, more bandwidth, things like pluggable transceivers and this co-packaged optics or CPO that everyone's talking about.
Precisely. And they made a really interesting point. The fundamental building blocks, the essential ingredients for pluggables and CPO, they're actually quite similar.
Oh, really? Like what?
You need lasers, obviously, modulators, detectors, the passive optics to guide the light, a thermal management, the driver electronics. The core pieces are the same.
So their decades of experience making pluggables gives them a leg up on CPO.
That's the core argument. Their broad technology stack, built for pluggables, is directly transferable. And they're not standing still on pluggables either. 1.6 terabits per second is in production this year.
1.6 T, wow.
3.2 T is in development, and they're already looking towards 6.4 T. Plus, they said they're actively engaged with a wide range of customers on CPO implementations right now.
And didn't they get a shout out from NVIDIA on CPU? That seems significant.
It is, yeah. NVIDIA specifically called them out as an ecosystem innovation partner for CPO. That's a major validation from a key player shaping that market.
Definitely. Now, they also think CPO could be higher margin for them than pluggables. How does that work?
Their explanation revolves around the DSP, the digital signal processor. In a typical pluggable, they integrate the DSP, but apparently they don't make a huge margin markup on that specific chip.
Oh, okay.
With CPO, the DSP often gets moved off the optical module onto the main board somewhere else. So Coherent's revenue in CPO becomes more focused on the parts they do make good margins on the actual optical components, the lasers, modulators, the photonics bits.
I see. So less of the lower margin electronics pass through, more focus on their high-value optical content. Makes sense. And underpinning all this is their internal capability, especially lasers. They really hammered that point home.
They really did. They position themselves as the, quote, undisputed leader in datacom semiconductor lasers, and they have the history to back some of that up. Gallium arsenide VCSELs, those tiny vertical lasers, over 20 years experience, shipped over 1 billion for datacom alone.
1 billion VCSELs.
Yeah, and they've already demonstrated a 200 gigabit per second per lane VCSEL and a 1.6T transceiver based on it, so they're still pushing that tech forward.
Impressive. But VCSELs aren't the only game in town, right?
Not at all. Indium phosphide is huge for them, makes up the majority of their current pluggable revenue. Here, they've demonstrated a 400 gigabit per second differential EML,
In EML.
electroabsorption modulated laser. Key thing is it offers better power consumption, lower crosstalk, really important for advanced signaling like PM4 at high speeds.
Okay.
And that 400 gig EML, they stress it's absolutely critical for future 3.2T, which needs 8 of those lanes, and looking ahead to 6.4T. And importantly, they said the majority of their EML-based transceivers use their own EMLs.
So vertical integration is key there. They control the critical component.
Exactly. They also have indium phosphide continuous wave lasers, the CW lasers, getting higher power for pluggables and CPO. And they've got an in-house silicon photonics design team, too. They showed off a 1.6T transceiver using their own indium phosphide laser combined with their 200 gig per lane silicon photonics chip.
So they're playing across all the major laser and photonics technologies.
Right. And they made a point of saying they believe they're unique in having demonstrated all these key high-speed building blocks. The 200 gig VCSEL, the 400 gig EML, the high-power CW laser, and the 200 gig silicon photonics.
That breadth must give them flexibility.
That's the idea. Offer VCSEL perhaps where cost or power is paramount, indium phosphide for top performance, silicon photonics potentially for scale and integration. They see roles for all three, including in CPO.
And they're scaling up manufacturing for these, especially indium phosphide.
They are. Tripled indium phosphide capacity in the last year. And significantly, bringing new 6-inch wafer capacity online next quarter. That's happening in Sherman, Texas.
U.S.-based capacity, important for resilience.
Very important. And gives them options use that capacity internally or sell those critical components like EMLs or CW lasers externally, perhaps to others pursuing a CPO. Strategic flexibility.
Okay, so beyond transceivers and CPO, they also highlighted optical circuit switches, OCS, as a major new growth area.
Yeah, this was presented as a significant SAM expansion opportunity for them. They see the potential OCS market reaching maybe $2 billion by 2030.
$2 billion. What exactly does an OCS do?
It's pretty cool, actually. It lets you switch optical signals directly while they're still light. It avoids converting light to electricity, switching the electrical signal, then converting it back to light again, which is how most networks work today.
Skipping the conversions.
Sure.
That sounds like it should save energy.
Exactly. That's a huge benefit they highlighted. Customers are seeing over 40% power consumption savings. In a power-hungry data center, freeing up that much power for GPUs instead of network switching, that's massive.
Huge. Any other benefits?
Cost savings, too, over 30%, and better network reliability because you can use them for very fast failover switching if a link goes down.
And they have some kind of unique technology here, not the usual approach.
Right. They stress this is a deep differentiation. Their OCS uses liquid crystal technology. No moving parts, very low voltage, extremely reliable. They pointed out this tech has been used in ultra-reliable subsea telecom systems for decades.
Liquid crystal, like in displays. Interesting. How does that compare?
It compares very favorably to conventional OCS, which often use MEMS microelectromechanical systems. Those have tiny moving mirrors, require high voltage, and potentially have reliability issues because of the mechanics. Coherent sees their solid-state liquid crystal approach as far superior.
So they took existing proven tech and applied it to this new data center need.
Pretty much. They combine that liquid crystal know-how from telecom, passive optics expertise. They've supplied passive components into OCS systems for years, and their software capabilities. They're actually the first Tier 1 optical vendor to demonstrate a full OCS system back at the OFC show in 2024.
And it's not just a demo anymore.
Nope. They've already announced their first revenue shipment.
Yeah.
So moving fast from concept to commercial product.
What's the roadmap for OCS look like?
Production release of a 64 by 64 port version this year. They're working on higher port counts, higher capacity switches. They also see interest for using OCS in DCI data center interconnect applications.
Connecting different data centers together.
Right, and modular versions, higher radix switches, basically bigger switches connecting more fibers. Lots of development paths.
Okay, speaking of DCI, that was another key growth area they focused on.
It was. As AI workloads spread out, you need massive bandwidth to connect these power-limited data centers over metro or regional distances. That's driving a huge need for DCI transceivers, ZR, and ZR Plus standards. They see that as a $4 billion market by 2030.
$4 billion just for DCI transceivers.
Yeah. And again, they point to their broad component technology, stack the lasers, the PICs, as helping them get products to market faster.
Any specific examples they gave?
They did. They launched a 100 gig ZR transceiver in a tiny QSFP28 pluggable form factor. Packing that much tech into such a small module was a challenge. They claim a multi-year lead there, enabled by their low-power indium phosphide tunable laser.
So density and power efficiency.
Exactly. They were also first to demo and first to market with 800 gig ZR. That was enabled by their indium phosphide photonic integrated circuits, their PICs, basically complex optical chips. And they were among the first showing 800 gig ZR working over the L-band wavelength range too, adding flexibility.
So pushing speeds, pushing density, adding features. What's the DCI roadmap?
Pretty clear progression. 100 gig and 400 gig ZR are in production now. 800 gig is ramping. And they have plans already for 1.6 terabit and 3.2 terabit DCI solutions down the line.
Okay, and the last piece in this segment was transport equipment, right? The longer haul stuff.
Right, the traditional long-distance networks. Amplification, switching, routing, monitoring, connecting cities, countries, continents. They see that as about a $5 billion market by 2030.
And their play there.
They have a very wide and deep portfolio.
Oh.
Things like EDFAs, amplifiers, wavelength selective switches, WSS, RODMs, all the building blocks. A key differentiator they highlighted is their gallium arsenide pump lasers used in those amplifiers.
Pump lasers.
Yeah, they provide the power to boost the signal. Coherent has over 20 years experience here, claiming excellent power efficiency and proprietary packaging gives them a multi-generational lead.
Okay. And they showed something new for transport recently, too.
Yes, also at OFC this year, a multi-rail technology demo. The idea is to let network operators push maybe 4 times the data through their existing fiber infrastructure within the same footprint and power budget.
Without needing 4x the gear or power. That sounds valuable.
Very valuable. Avoids costly physical site upgrades just to handle traffic growth. An industry-first demo, they said.
So summing up the data center and comms picture, it's about leveraging that deep internal technology stack across multiple high-growth fronts, pluggables, CPO, OCS, DCI, transport, while also benefiting from customers wanting supply chain resilience, where their U.S. manufacturing helps.
That's a good summary of the story they presented. Big growth expectations, driven by broad tech leadership.
Okay, let's shift gears then to the other major growth engine they discussed, industrial lasers and materials. How does this fit into the overall financial picture?
It's presented as a very significant contributor, especially to the margin profile. It's seen as the higher gross margin part of the business. The fundamental growth drivers here are a bit different, though.
How so?
They kind of boil it down to 2 main things. First, modern manufacturing just uses more and more photonic steps. Lasers are doing more jobs.
Okay, more laser processes.
Right. And second, the lasers needed for each new generation of manufacturing get more complex, more sophisticated, higher performance.
More lasers and better lasers.
Essentially, yes. And their competitive advantage here, they argue, comes from having a really broad portfolio covering the 5 key industrial laser types based on wavelength, power, pulse length, etc. And critically, backing that up with deep internal technology. access to their own crystal growth, specialty fiber, pump lasers, materials science, software. That vertical integration lets them build these complex next-gen tools.
Where do we see this playing out? What are the key markets?
Several big ones. Semiconductor manufacturing is a prime example. Think about wafer inspection using lasers. 25 years ago, maybe 20 laser-based steps. Today, it's 80, maybe over 100 steps.
Wow, huge increase.
And the lasers themselves went from, say, a relatively simple green laser back then to incredibly complex 266 nanometer deep UV lasers today.
Their material science is also key here. They said their materials enable 8 out of the 10 key steps in the overall semiconductor manufacturing process flow.
8 out of 10 steps enabled by their materials. That's deep penetration. It is. Then you have precision manufacturing. Automotive uses more and more laser processes, often needing higher power lasers. Smartphone manufacturing, they made the point that basically every single part in your phone has been touched by a laser.
Every card.
Virtually. And the type of laser is evolving rapidly. For cutting delicate layers in phones, they've gone from nanosecond pulse lasers to femtosecond lasers, now even UV femtosecond lasers. These incredibly short pulses let you cut material with extreme precision without heating up and damaging the surrounding area.
Cutting with light pulses shorter than a trillionth of a second without heat. That's pretty mind-bending technology.
Yeah.
What about displays?
Big area. The OLED market is growing fast square footage, roughly doubling. That needs more powerful lasers and these complex line beam optical systems for annealing the OLED material. But the really big future opportunity they flagged is microLED.
MicroLED for TVs and other displays.
Exactly. They put a number on it, potentially a $1 billion SAM opportunity for every 10% adoption rate of microLED TVs.
$1 billion per 10%. That definitely grabs your attention. What's enabling that?
A new UV laser transfer tool they developed uses their XML lasers. It can transfer something like 50,000 tiny micro LEDs per second onto the display backplane. This massively speeds up what's been a bottleneck for micro LED manufacturing.
So their specific laser tool could unlock that whole market.
Interesting. What else in industrial?
Last big area is instrumentation and health sciences. Things like flow cytometry analyzing cells very quickly requires more and more different laser colors. Gone from maybe 2 colors years ago to 6, 9, even more today for deeper analysis.
More colors, more data.
Right. And they also just launched a new femtosecond laser, the Axon FL, specifically for neuroscience research. It allows high-resolution 3D imaging of neurons, mapping brain connections, even in mobile subjects, contributing to the fight against neurodegenerative diseases.
That's quite an impact, from industrial tools to potentially helping cure diseases. It really shows how pervasive photonics is becoming. One other really important part of the industrial story they highlighted was service and consumables revenue.
Ah, right, the recurring revenue stream. How significant is that?
It's already about 25% of their total industrial segment revenue, and it's growing. Critically, it's stable and high margin.
High margin service.
Very. They gave a great example. One of their big semiconductor wafer inspection laser systems, the Azure, the initial system sale might be, let's say, 1x revenue, but these systems run in fabs for 20 years or more.
Right, fabs run for a long time.
So they need periodic refurbishment. Complex work has to be done back at Coherent's clean rooms. Over the 20-plus year life of that single system, the revenue from just the refurbishment can be around 5 times the original system price.
5x the initial sale just from service. Wow. That makes the business incredibly sticky.
Exactly. Very sticky, very stable, high margin. And as their installed base of tools grows, that future service revenue stream just keeps building. It's a really valuable underpin to the industrial business.
So the industrial picture is more laser steps, more complex lasers, enabled by their broad portfolio and vertical integration, driving growth across semi, manufacturing, display, health, all supported by this incredibly valuable long-term service business.
That's the essence of it. A high-margin engine with built-in stability.
Okay, so driving these growth engines requires focus. They also talked about strategic optimization, streamlining the business.
Yes, absolutely. It ties back to that disciplined capital allocation, doubling down investment R&D, CapEx only on the core high ROI growth areas we've discussed, and importantly, identifying and exiting programs or product lines that are, lower ROI or just not strategic anymore, getting rid of distractions.
And they've finished reviewing the portfolio?
They said the assessment part is complete. Now it's about execution. Some actions take longer than others, but they indicated we should expect to hear more specifics about these actions in the coming quarters.
And part of that could mean selling off some non-core businesses.
That's definitely on the table. Divesting non-core product lines is a stated strategic option. The logic is pretty clear. These lines typically run at lower gross margins than the core businesses.
All right.
So even if the divested revenue is less than, say, 10% of the company total, shedding those lower margin lines could provide a significant boost to the overall company gross and operating margin percentages. It accelerates hitting those financial targets.
And the cash from any divestitures.
Straight to debt paydown, that was explicit, ties directly back to strengthening the balance sheet.
Makes sense. They also spent some time highlighting their supply chain as a strength.
They did. And you can see why customers would value this right now. They have a truly global manufacturing footprint, 60 sites, 14 countries. But importantly, about half of those sites are in the U.S.
Significant U.S. presence.
Yeah. Plus, they make so many critical components and materials internally. This combination gives them resilience, flexibility, optionality, things customers are really prioritizing, looking for geographic diversity and supply assurance.
Especially with ongoing trade uncertainties, tariffs, things like that.
Exactly. They address tariffs directly, saying based on current policy, they don't expect a significant impact in Q4 of this fiscal year. But having that flexible footprint and investing in more U.S. capacity, like the new 6-inch indium phosphide line in Texas, positions them well to adapt if policies change.
Okay. One last point, they mentioned a change in how they report their results.
Right. Starting next fiscal year, FY26, they're moving from 3 reporting segments to 2. It'll be just industrial and data center and communications.
Why the change?
Primarily, they said, to better align the reporting structure with how they view their end markets and their main growth engines. Industrial is framed as the high gross margin foundation, and data center and comms as the primary high growth engine. Simpler alignment.
Got it. Okay, so let's try to pull this all together. What's the final picture Coherent is painting for the future?
Well, they're setting some ambitious financial goals, no doubt. Double-digit growth, significantly improved margins, much lower debt.
And the strategy to get there relies heavily on leveraging their sort of deep technology expertise and broad product range.
Yeah, capitalizing on this trend where photonics using light is becoming absolutely essential across so many diverse, high-growth markets. Think AI data centers, advanced semiconductor and precision manufacturing, next-gen displays, healthcare breakthroughs.
It's a strategy that leans on their tech leadership, their manufacturing scale, that ongoing portfolio cleanup, the resilient supply chain, and importantly, that growing stream of high-margin service revenue from the industrial side.
That sums it up pretty well. It's a complex picture, but those are the key pillars they presented.
It really is fascinating, isn't it? Seeing how manipulating light is becoming so fundamental to, well, almost everything. Communication, making things, understanding health.
It really is, and it makes you wonder, and maybe this is something for you, the listener, to think about. As we rely more and more on photonics for all these things, how might these foundational technologies, the lasers, the optics, the switches we talked about, how might they fundamentally reshape our interaction with technology and the physical world over the next decade?
Beyond just faster internet or better manufacturing.
Exactly. Think about the potential in areas like advanced sensing, maybe new types of medical imaging, or even enabling completely new fields we're just starting to explore, like quantum computing. Where else could manipulating light take us?
Definitely something to ponder. That brings us to the end of our deep dive into Coherent's Investor Day.
Thanks for tuning in.
Thanks for joining us.